Trading becomes the easiest thing to do when you understand the daily bias. But there is a problem. Not every ICT trader or smart money concept trader knows how to identify daily bias. Use this my secret method to determine the next move in the market, and your trading will not be the same. So the first thing you want to do is smash the like button, subscribe to the channel. Okay, so let me show you my secret method of identifying the daily bias. So the first thing I want to talk about is candlestick signs, right? So the candlestick formation, and usually what it is this. Let's say you have your daily candle. Okay, now mind you, this must not necessarily be a daily candle. It can happen in any particular time frame. Now let's say this is our bearish candle. So we have the open of the candle right here. This is the open of the candle. Okay, so we have the open of the candle right here, and price pushed up, later came down and closed, came down, pushed in and closed here. So what this is telling me is this, that in my next move, in the next candle opening, is going to come, like it's going to open and close below this candle. Why? Because this candle is an indication that there's going to be a bearish continuation. So you might be asking, what exactly is the secret? The secret behind this is that we are going to use this majorly on the daily time frame. So once you have understanding of this on the daily time frame, you can move into scale into any of your time frame and begin to work with it. Okay, so we're going to use the replay feature and I will show you exactly how it works. So before then, let me show you in hindsight. So first, you can see that after this candle opened, what it did, it went down and took out the low of the previous low and pushed up. Look at it, pushed up and came down and closed below the next candle, the previous candle low, candle high rather. Okay, so which makes it, this is what we have, right? So we see we have a close of candle here. So now that we have a close of candle here, what are we expecting? We're expecting that the buy side liquidity is round. We are expecting that the high of the bullish candle is round. So what happened? The next candle opened and closed above it. The same thing we're expecting of this candle. All right, price opened, it opened immediately and pushed down, went up, took out the highs, and what did price do? Price went up and came down and closed here. So what we're expecting next, we're also expecting that this high is taken. But in this case, what happened? Price pushed high, went close to that high and failed to close above it. So rather, price decided to come and close like below the previous candle low. Now, this is something you must pay keen attention to, and this is why you should watch the video to the end, because there's something I will show you that will make you to determine whether this will be a bullish continuation or a bearish continuation. So what happened in the next day? Price closed at the next candle open and took out this low. The same thing happened. So we're expecting that price took out the low, took out high and closed here. So we're anticipating that price comes and take out this high and the next candle. So this phase is more like a consolidating phase. So price come and does what? And took out the body alone instead of taking the wicks. And what did price do? Price decided to come and took out the low. So the first thing you want to take out here is this: price must take out either the previous day high or the previous day low. Now, the day that the previous day high or low is not taken, you just have to continue with the same trend. For instance, let me see if I can show you an example. Okay. Now there is Israel, because usually most times the high or the low will be taken. You can see each of these candles, they have the highs or lows taken. This one, the high was taken, low was taken. All right, so this on this particular day, the next candle formed. Okay, so this is an example. Actually, the high of the candle have not been taken, the low was not taken right here. Okay, so in this case, what we're expecting, we're actually anticipating that price will continue to the downside. Why? Because price closed bullish, bearish below the previous day's low. So what happened? But at least price came to the close and took out the close of the candle. So two things here that you must understand is either it takes the wicks, that is the highest point of the candlestick, or the opening or closing price of the candle. Now, enough of that, let's go to the replay, and I'm going to use a replay so that you have a better understanding. Meanwhile, if you have not smashed the like button or subscribed to the channel, please do well to subscribe to the channel. You know it's a new channel, we're trying to grow this. Let's see how fast we can grow this channel. Okay, so first thing that you want to understand here is this. So now price came and took out this low, right? So what are we expecting? Took out this low and closed inside the range. All right, closed inside the range. So in this case, we're actually expecting a bullish move. I'm expecting that this high is taken. Okay, I'm expecting that this high is taken, and let's push and see if that's possible. All right, so price come, the next candle formed, and what happened? Just the open of the candle that was taken. All right, and price pushed downward to the low. Okay, so this is it. Now on this particular day, price closed like almost inside the range. We have 1, 2, right? But still, I'm expecting a bearish move. I'm expecting that price come and take out the low instead. Why? And another secret, don't worry, I will share with you as we move on, so make sure you keep watching. Okay, so the low has been taken. So in this case, the low was taken and price closed inside the zone. So what we're expecting that this high is taken. So remember, all of these are previous day's highs. So we're expecting that the highs is taken. So in this case, what do you do after understanding that? Okay, the previous day candle closed bullish. For instance, this one closed bullish. What I will do the next day is I will try to see if I can look for bullish setups. Try this, guys. You will notice that your trading will actually change for good. Just have an understanding. Go to your chart and understand this. You see, the high was taken and it was taken massively. So all of these highs were taken. So we're also anticipating that this high is taken as well. Okay, why? Because price closed above the previous day highs. So we expect that price should close above the highs. And we also have the lows, though. Well, I'm expecting that price closes above the high. So you see, price went and reached out to the high, though it did not close above it, but it reached out to it. All right, so which means if you are taking buy setup, you would have still entered and gotten a very good setup from the lower time frames. So what happened here? Price pushed up, came down, took out the lows, right? So it failed to take out the high but took out the lows. Okay, and close back into the range. Two things here is either price comes and take out the high of this range, or comes and take out the low of this range. But in this case, I think taking out the low will be high probability. Why? Because of the kind of momentum that's set into the market. So as you can see, the same thing happened. Price comes and took out the low of the previous candle, all right, and closed back into the range. All right, so what exactly are we looking at? And it also closed bullish, so we're looking at buy side liquidity being taken. Okay, so let's see. I'm expecting that the buy side liquidity is taken actually. Okay, okay, I'm having some network issue. So usually while we wait for this, you must understand that if you know exactly how to frame this setup, you know how to do this, you see that your trading will skyrocket. You see the high was taken exactly as said, so I'm expecting that this low is taken this time around. So I'm expecting this low to be taken, and boom, there it goes. So I'm also expecting that this low is taken. So let's see. All right, so price reached out for the low, though it didn't take it, but it reached out for it. So it's the same thing. Like I said earlier, you would have also been in profit. So also we are expecting that this high is taken this time around. Okay, let's see. Now, what is this? Might not be 100% but understand that most of the time it's going to work, right? We're talking about the percentages, and it's going to work. Okay, so price have taken out the low instead, and we're expecting that the low is taken. Okay, let's see. Let's play price, and all right, you see the low was taken, and the next candle also took out the low, the next low. Okay, so I'm expecting that the high is taken. You see, high is taken, and I'm also expecting that the low is taken. Why? Price went up, took out liquidity, and pushed down, closed inside the range. So let's see what happens. And you see it happened again. Okay, so you can literally continue like this, go to your chart and understand exactly how these things work. When you understand this, it's going to help you to frame your setup on a daily basis. You know what to do, you know where to go, you know where your draw on liquidity is. Okay, so this is even beyond using structures. Now you are just using the candlestick formation, just the candlestick, the higher time frame candlestick. That's what you are using. You see the same thing happened here. This low was taken and closed bullish, and this high was taken, you see, and still closed bullish. And I'm also expecting that this high is taken as well. So let's see if it happens. Okay, so this time around the low was taken, and why was that? You see, one price went up, took out, and came and closed inside the range. So we're expecting lower prices. So price come and push down, and you see we have equal lows here, which is liquidity. So I'm pretty much sure that this low should be taken. And let's play price and see. All right, you see that the low is taken. So you can actually be precise. Knowing your daily bias can be as simple as A, B, C, D. All you have to do is to have an understanding of how these things work. Okay, so I'm still expecting at least some lower prices here. I'm expecting lower prices here. So I want us to play this faster to see how fast we go. So I'm expecting lower prices here. So the percentage through which this work is actually high. So price took the low, took the high, came down, then closed inside the range. So we might see higher prices. So we might expect movement on both sides. Okay, so let's play price, and boom, price is still inside the range. So I'm expecting lower prices. So still inside the range because price went in and take out liquidity. So I'm expecting lower prices. So let's play price and see, and boom. So you see the low was taken, liquidity was taken, and price closed bullish. Price came, took out all the liquidity and pushed up and closed above. So we're expecting higher prices. Okay, so let's go and let's see how far we can go. All right, okay, so price decided to take out the low of previous day, the low. All right, now there's something I want you to understand. if you see the overall trend has been bearish, right? And we have some volume, we have this as a volume imbalance. Okay, so we're actually expecting that price reacts on this, but based on this particular daily bias strategy, it can be mechanical, right? So you don't have to look at the left side, you just have to flow with what just the candles. You see, with just the candles we're able to frame the daily bias. So like in this case, I think I will expect a higher price. Why? Because we see price reaction on this volume imbalance, and price came in and went back in and closed inside the range. So let's see how far if it's going to work. You see, it worked perfectly. So at this point we can expect our prices, because this is a very strong support. As a matter of fact, we have an inversion right here. You see this. All right, so in my subsequent videos, once we get to a certain amount of subscribers, I'm going to make the video on this inversion and the strategy is going to work on. Okay, so make sure you subscribe, don't miss out from my next video. Okay, so while anticipating that price comes higher, you see a lot of liquidity from here. So all of these are liquidity, so I don't want us to go out of the framework of what we're doing. So I'm expecting higher prices from here, and price closed above previous day candle, and boom, let's see, and the candle was taken, the high was taken, and in this case I'm expecting a low, a bearish candle to form in this case. All right, and by now you should know why we want the low to be taken, and you see the low was taken perfectly. So we're expecting that now the low has been taken, we're expecting that this candle's high is taken. Let's see if it's going to work out, and boom, it took out the highs. Let's expect that this low. So at this point the market is consolidating. So for the days of consolidation, you might literally use this method to even trade on lower time frame, and you still get results from whatever you are doing. All right, so you don't have to bore yourself with a lot of analysis using this strategy. You see, price came in, reached out for the low before pushing to the upside. So literally you can do this all day long and have an understanding on how this work. And what the truth is, once you are able to understand, you see perfectly, once you are able to understand how this work, you see that your win rate is going to skyrocket. I'm expecting that this high is taken, and let's see exactly what happens. And boom, price went for the high, and price came and closed within the range. Now look at the range. I've been saying range. For some of you that does not know the range, this is the range between the previous day's candle and the rest. Okay, so we have this as the range. Okay, so you see the candle formed inside. The truth is, we can still be bullish on this, because even if you look at it vividly, and this is the daily time frame, we have some inefficiency right here. So we might want to expect efficient prices for continuation of the market higher to take out the buy side liquidity. And price comes in. Let's see, let me play that again and see how the next candle is formed. Okay, so you see price comes in, took out the fair value gap, so the inefficient prices have been filled, and price created an efficient price and took out the whole range, and we have a new zone, and we are expecting price to push up as well. All right, so you can see perfectly price did the same thing, and I'm also expecting that this high is taken, and boom, you see the momentum. All right, so literally guys, you can use this to pass your funded challenge, you can use this to grow your account, to double your account, and so on. All right, so you can literally use this, guys. Smash the like button, subscribe to the channel. You don't want to see this channel getting few subscribers when it's providing you a lot of values. So you might want to subscribe to the channel so that we'll be able to do more. Okay, so when you subscribe, I'm going to do more, because I feel that you are enjoying my content and you are enjoying the video, right? So let's see how price is reacting, and boom, price continues to the upside. And let's assume that you took the trade from here, from this fair value gap, but with time I'm going to explain to you how to engage in trades like this. But what this video is all about is daily bias. So I'm making attempt to ensure that you have an understanding of what the daily bias can actually look. So we can actually continue all and on and on and on. We can just continue like this. All right, so you can see how clean and how powerful this strategy can be. Right, so please, in case you want to know more on fair value gap, I urge you to watch the video on the end screen, and don't hesitate to subscribe to the channel once again, and don't also forget to leave your feedback in the comment section below. I will appreciate it when I see your feedback. Have a nice day, and we'll see you on the next video. I'm signing out. Peace.